Sejam bem-vindos a mais um webinar do OurCrowd. É um prazer estar aqui hoje com vocês. Meu nome é Rodrigo Monteiro. Hoje a gente vai falar um pouco mais sobre Israel, OurCrowd e Venture Capital. É uma oportunidade para todos os presentes aprenderem um pouco mais sobre como a gente faz para investir em boas empresas. Tenho hoje aqui presente, junto conosco, John Medved, CEO Founder da empresa, tanto quanto o Allocation, que é o nosso chairman de US OurCrowd. Falando um pouco do histórico de cada um, Allocation vai começa sua carreira com investment banking, passa muitos anos na Jefferies, sempre focado em análise de empresas de tecnologia, e junta-se a nós alguns anos atrás. Depois a gente vai passar a bola para John Medved, que vai falar um pouco sobre sua carreira, trajetória e como que hoje a gente se tornou a firma de Venture Capital mais ativa de Israel em Venture Capital. E ele também tem uma trajetória super interessante, passando por várias empresas na sua carreira, montando várias startups, levando elas a eventos de liquidez, né? E antes de fundar a OurCrowd, passou por uma experiência muito sólida de investir em early stage, criou a empresa em 2013, fundada no momento em que a gente não tinha muito modelos de empresas, plataformas digitais, em que davam acesso a investidores a deals super seletos, né? E conseguimos montar uma plataforma em que ela democratizou completamente e revolucionou o acesso dos investidores a esse tipo de ativo. So, I'm going to change here to English to pass the word to Alec. He's going to start saying about, venture capital and how to make a diversification with different asset classes and how it's important to invest in private markets. Then we're going to have John speaking. If you guys want to somehow ask any questions, please, feel free to click on the button on the chat below, make your questions, and we're going to end up with a Q&A session. So, Alec, please.
Thank you very much, Rodrigo, and thanks to all of you for taking time to join us this morning. First, just a tech check. Can you see my screen? Okay, excellent. Again, thank you. Again, it's Alec Ellison. I'm speaking to you from Greenwich, Connecticut, just outside of New York. So similar time zone to yourselves. So I want to talk about the venture capital category, but I want to start by taking a bit of an historical look on value creation in the last 40 years and pose a question, which is, what has created more value than the digital revolution that we have experienced the last 40 years? And the answer is actually a change in the financial markets, which is the decline in yields. And this is, you'll forgive me being a little US-centric here, but 40 years ago, almost exactly, late 1981, the yields in the US peaked at about 15% for long bond yields, where you could literally lock in a 30-year return with no risk at 15%. And what then began was a 35-year bull market in bonds, meaning that bonds were rising and yields were declining, to the point where they got down to from 15% to about a little over 1.25% 5 years ago, and then plumbed even newer lows during the pandemic, and currently are right around that kind of 1.3% range. Now, why has that created more value? It's because of the multiple expansion that comes with declining yields. Multiples have gone up dramatically, multiples of earnings, revenue, and that has literally created tens of trillions of capital market value, more than the digital revolution itself. But why this is so important is that's a look backwards. As investors, we need to look forwards. And this can't happen again. Mathematically, it can't happen again. And therefore, focusing on growth from the continuing digital revolution, which I will come back to at the end of my 10-minute segment, focusing on growth is more important than ever, because that's where future value creation needs to come from, not from multiple expansion. Now, a second change in the capital markets now has been that before 2000, companies went public much earlier and creating much more opportunity for a public market investor. What you see on the left are bellwethers such as Apple, Microsoft, et cetera, and what their valuation was when they went public. Those are those tiny little bars, those little blue bars that were $1 billion or less. It's the y-axis there. And then those light blue bars are the multiples on your money if you bought the IPO, literally thousands of times your money. Now, these are, of course, the winners. But there were many, many companies that were 10, 20, 30, 40 times that were going public in the 80s and 90s. And that changed, though, in terms of when the companies went public, and therefore the return you could earn after 2000. When Google went public as a $23 billion market cap, still a great return. You see there, literally 78 times your money if you bought in the IPO. But things really changed in the teens. When Facebook went public, it was 80 billion. You see towards the right, Uber at 75 billion, many in the 20s, $30 billion type of range. Now, yes, there are occasionally companies that have gone public earlier. You see Beyond Meat, a company we were an investor in at 1.4 billion in 2019, or Lemonade at 1.6 billion in 2020, which have given good returns, not like the old days, but very good returns to public investor. And the SPAC market in the US is creating more opportunities for companies to get public. But we've still seen a fundamental secular shift towards companies going public later and leaving less on the table for the public investor to enjoy, with the value, with their wealth really accruing to the private investors. And the reality, by the way, is that most companies, most venture-backed companies, never actually go public. 95% will realize an exit through a sale, and a merger and acquisition, an M&A deal. And so the public market investor will never even see that opportunity. Now, this has gone hand in hand, in fact, been a driver of increased allocation to venture capital, more and more money moving to the private markets because of these two shifts in the public markets that I described earlier. This ongoing decline in yields, which have now been basically flat, low yields for quite a while now and looks to continue, as well as the dramatically delayed IPOs for those few companies that do go public. And so venture capital globally has charged ahead, growing 4 times from 2011 to 2020. And this year, it's even accelerating further. So 2020 was a bit flat, partly because Q2, as the pandemic really hit, slowed things. But we've seen more than a recovery thus far in 2021. So the venture capital bull is charging ahead. And I don't want to steal John's thunder, but he'll talk about Israel, where the growth and the acceleration is even more pronounced than what we're seeing globally. Now, these changes in the capital markets and this focus on growth have not been lost on the smartest money out there, the institutional money. We define institutions typically as endowments, pension funds, insurance companies, and sovereign wealth funds. Yale University pioneered a shift in asset allocation in the mid-'80s. David Swenson, who was the longtime chief investment officer there, just passed away from cancer about 3 months ago. And the financial press was full of testimonials and obituaries talking about how he single-handedly changed the venture capital and private equity markets by creating a model where endowments would allocate more to those private markets. And he had a very simple insight, which was the concept of what he called permanent capital. As an endowment university, he said, I had the capital 100 years ago, I'll have it 100 years from now. I can therefore think very long-term, and I can think liquid in allocating my capital. And he started allocating more and more to venture capital and private equity, away from the traditional 60% equity, 40% fixed income allocation model that had dominated, in some cases still permeates the institutional world. And the proof there, the proof of his insight came in the returns, because Yale's endowment outperformed every endowment over the last 35 years. In fact, almost any 20-year period, it was the top performing endowment. And therefore, many, many others started to follow the Yale model and realize similar types of returns. So we saw a fundamental shift of assets towards these private markets. So what you see here is the allocation into the 8 categories that Yale looks at by of their $30 billion plus endowment, with the target of 2021. The fiscal year just ended in June. So we don't know if they actually hit it or not. But not only is the absolute percentage of that 30 billion in venture capital probably striking to many of you at 23%. Look at the trend just the last 7 years in green, from 13.7 to 23%. And I have a hunch it's actually going to be up even higher for the 2021 target, which will be released next month. Now, this has largely been at the expense, it's got to come from somewhere. It's been at the expense of real estate and natural resources, hard assets, if you will, where there's been a very sharp decline in the allocation to those categories. Now, this is not to suggest that individual investors should be allocating a quarter of their capital to venture capital. But what it does suggest is the longer term you can think, the more multi-generationally you may be able to think. Again, it always depends on one's individual family, et cetera. The longer your horizon, the more it makes sense to allocate to these illiquid, long-term capital gains-oriented categories, particularly venture capital, which is really what personifies growth in the investment world. So the bottom line, just to summarize, companies staying private longer, as I showed you, very different pre and post 2000. Exits, as I said, are mostly through M&A, so many don't even get public. When they go public, they're at much higher market caps. In general, there are exceptions, as I said, and the SPAC dynamic is changing that a little bit, but it's still a fundamental secular change from the old days, leaving less upside for the public investor. Institutions have seen this for a while. They've been increasing their exposure to venture capital, and now we're seeing individuals like yourselves starting to do the same, and John will talk about how we enable that. And the bottom line is that most of the value is captured in the private market. Now, I said at the outset that I would come back to the digital revolution because we contend, partly due to the pandemic, that the digital revolution is now hitting a new gear, in some ways accelerating. Those venture capital numbers in part illustrate this. And I borrowed 2 quotes here from Satya Nadella, the Microsoft CEO. The one on the right was was on the second quarter earnings call, so July of last year, talking about how the first 5 months of the pandemic had made clear the criticality of digital technology and the key to business resilience. And now look a year later from that, the July 2021 earnings call, more of a, let's say we're more of in a new normal, not just the trying to figure things out in the pandemic environment we were in Q2 of 2020. And you see this quote from about 6 weeks ago: about every person, every organization is requiring more digital technology to be more resilient and to transform. In fact, we're living that on this call right now. We wouldn't have had a webinar like this 18 months ago. So we really are seeing the digital revolution hitting a new gear, which reinforces where I started with the criticality of investing in growth, and specifically the growth that can come from an accelerating digital revolution. And with that, I will turn it over to my partner and the OurCrowd founder and CEO, John Medved.
Thank you, Rodrigo. Thank you, Natalia. Thank you, Alec, for that fine presentation. I'm going to talk a little bit specifically about the Israel venture capital scene, what OurCrowd does, and our unique recipe for providing access broadly to the venture capital asset class. I need to, first of all, disclaim you that past performance is not indicative of future results. And that's me, in a little bit younger. Look, Israel's a small country. We're about 9.5 million people, but we are now ranked by the World Economic Forum as the world's most innovative country. We're number 1 in the growth of innovative companies, number 1 in entrepreneurial culture, number 1 in companies embracing disruptive ideas. Basically, we're a superpower when it comes to innovation. And you can see the numbers that you saw earlier from Alec really tell this story. Over the last decade, this staircase of investment in Israeli high-tech and innovative companies has just gone wild. And last year, in 2020, we thought, during the pandemic, really $10 billion? How is that possible? It's a great number. Well, look at this year. This year, it's probably going to be closer to $24 or $25 billion. So this kind of performance would be wonderful for a company. When it affects an entire ecosystem, it makes you open your eyes and say, wait a minute, I think I should have some of this in my portfolio. Now, what makes this all tick in Israel is this remarkable, we call it like an ecosystem, which starts off with the entrepreneurs at the middle. Many of them come from the technology units of the Israel Defense Forces, our army. They meet angel investors who provide the initial capital. Later on, they'll find their way to venture capital funds, as well as even private equity funds now that are providing growth capital like crazy. In the first half of the year, there was 40 different rounds of finance of over $100 million just in Israel. And now, finally, there are so many multinationals who are scouting, almost 400, in order to buy these companies in M&A transactions, like Alex said, or to partner with these startups. It's all about unicorns today. It used to be that a unicorn was a mythical creature, very rare. Not so rare anymore. In Israel, there are 70 unicorns. Around the world, maybe about 700, meaning that Israel, as natural, has about 10% of the world total of unicorns. Not so obvious when you realize that Israel is about 0.2% of the world's population. So we're about, call it 50 times over-indicated in terms of these once mythical characters. Now in America, they're fighting for these Israeli unicorns to come and set up shop over there. So New York and California, the two ends of the United States, are now trying, each of them, to attract more Israeli unicorns to their market. We would like to bring some of them to Brazil so they can work with you and build businesses there. Turns out that Japan investment is going way up in Israel, literally now represents about almost 10% of the total, and European investment is going up in Israel. And when you add to this the recent rapprochement, or the normalization of ties between Israel and its Arab neighbors. Excuse me one second. I have a newborn grandson, and my wife is trying to reach me desperately. So I'm going to have to take 1 second as a break. You're going to have to forgive me on this. I can't.
John, I can carry the torch if you'd like.
Go ahead, please.
Okay. Don and I have teamed on this sufficiently. So, one of the drivers that's going on in Israel is the historic Abraham Accords that were announced a year ago, I believe either yesterday or today, September 13th or 14th last year, which was a real shock to the globe, which was the normalization of relationships among the UAE, Israel, and Bahrain, and other countries having joined after that. And this really opened the floodgates, because business was happening, particularly between the UAE and Israel, which are very similarly sized economies, similarly sized per capita GDP as well, I might add, in terms of sophistication, and that there have been efforts to do business. So when you take away the regulations and the diplomatic issues and the laws, suddenly the floodgates open. And this has been driving a tremendous amount of not just investment, but business between these countries, with the hope that others in the Arab world will join the Accords in the not too distant future and really create a regional ecosystem of growth and technology. John, I can't move the slides though.
Okay, I'm doing it for you.
Okay.
Okay, I'm on a webinar now with about.
Okay, now there was a lot of there was really a honeymoon period that after the Accords came out last year, with all kinds of announcements. We ourselves opened an office, now 5 people in the UAE, but it's not just a honeymoon that then trailed off. The business ties have continued to grow with real dollars being invested, real corporate development and business relationships developing between these. And the estimate, I believe currently there are about 30 flights a week. I think that's a good data point to quantify how much is actually occurring between the two, with an intention of getting to 100 flights a week, direct flights between the UAE and Israel. Here you see some headlines relating to.
Alec, I'm ready to rejoin now.
Okay, all right, back to you. Okay.
Appreciate that. Okay, so we think that the ability to do the work with the UAE is going to grow things, but there's also another change in the Israeli ecosystem, and that's the fact that Israeli companies, which were traditionally all about B2B, about serving companies, are now moving into serving consumers. And this is good news. Facebook, by the way, just estimated that about 38% of Israeli companies today, startups, are now focused on this consumer market. The reason this is good news is you look at most of the huge giants in technology, whether it's Apple or Facebook or Google or others, they're focused on consumer markets. And I think that what you'll see is the growth of Israeli companies already going from 1 billion in value to 10 billion. And I predict by the end of this decade, you'll see 50 and $100 billion Israeli outcomes. Another thing which is important in Israel is the semiconductor market. The world is now fighting over chips, and that's not potato chips or even the British, fish and chips. It's about semiconductor chips. And it turns out that the big giants all want to integrate their tech stack from the semiconductor up to the top of the application layer. So people like Amazon, Microsoft, Apple, and Facebook are all building chip groups to design their own chips. Guess where they're building them? In Israel, because Israel has this huge semiconductor position where today, for example, Intel already not just has a presence, but does the majority of its some of its most important chip design in Israel. So OurCrowd was set up to enable you and literally hundreds of thousands and someday millions of you to get access to the venture capital asset class. I mean, Alex showed you what's going on at the Yale Endowment and their 23% target this year for their resource allocation into venture. Let's say you buy that and you say, okay, I like that. I want to go, maybe I can't get 23% of my portfolio, but I'd like to put 5% of my portfolio. How do you do it? Well, in the old days, you would find a venture capital fund. You would see if you could convince them. Good luck calling from Brazil to a Silicon Valley fund and saying, I'd like to give you a check. It's almost impossible to get in. So that's why we set up OurCrowd, so that you could get access both to funds and to individual companies before they're public, so that you can get that private market value capture that Alec was speaking about in your portfolio. And today we're, quite a big platform. Actually, we're at 135,000 accredited investors. If I don't change these slides every couple of weeks, they get out of date. We have investors from all over the world, 13 offices around the world. Today, over 280 companies in our portfolio, 28 funds, a lot of money under management. And as you'll see shortly, some pretty interesting performance. The heart of venture capital is always deal flow. How do you get companies to look at, and how do you get into these investments? And we see hundreds of companies that are brought to us from our investors, from our companies who are bringing their friends, from our own networks. We deep dive into about 20 of each, 200 that we see. Okay, we then do diligence. We actually start to negotiate terms. We lead these rounds, and then we're going to select a couple of them. We invest our own money as a principal investor in every company that we either place in one of our funds or open up directly. And then we open up this opportunity to you, the investor, on the same exact terms as we've invested. Now, we invest alongside leading venture capital funds like Andreessen Horowitz or Sequoia or US Venture Partners or Insight, et cetera. We invest alongside major angels that you've heard of, whether it's Mark Cuban from Shark Tank or Richard Branson or Peter Thiel, et cetera. And we work very closely with most of the major multinationals in the world. When we look at a deal, we're looking for, first of all, great teams. Especially as you go to the early stage, it's all about people, but it's always about people. We look for big markets. We don't want to do a market share play. We want a market that's going to grow on a secular basis very fast. We are geeks and we like deep technology. We look for real traction. The company has to be making progress. We're very price sensitive, looking for an attractive valuation. And finally, we're looking whether or not people listen and they want our help so we can actually add value. Because unless you add value, you're not going to get into the good deals. This is not about a passive investment where you buy Google stock and wait. You have to get into these companies and begin to help them. Now, the huge advantage that we have at OurCrowd is that we can bring our 135,000 members, hopefully some of you soon, to help these companies. So if they want to open up business in Brazil, we're there. They want to open up business in Singapore, we're there. They want to get to the UK market or to the South African market, we can help them literally all over the world. We're run by a great team. You're here talking to the CEO, myself, and Alec, who's the chairman of our US operation. The rest of our team are professionals, people we've worked with for literally decades and have a tremendous wealth of tech and innovation experience. When you look at where our deal flow comes from, turns out about 50% of it is from Israel, which is great because Israel's doing so well, but already 50% of our deals are coming from outside of Israel. So you'll see that we've been investors in major companies from the US, such as Beyond Meat and Uber, by selling them a company called Jump. So you can get into those companies before they go public through the OurCrowd platform. As I mentioned, we've had a lot of success in terms of exits to date, been involved in some of the leading IPOs, by the way, of the last couple of years. Beyond Meat was the best IPO debut on NASDAQ in 2019, and Lemonade, which is another one of our companies, was the best debut in 2020. And then there are a bunch of really great acquisitions, whether it's Kenna by Cisco or Wave by H&R Block, et cetera. And some of the largest companies in the world are buying OurCrowd companies now. Now, you might ask yourself, how does this happen? Why has Israel got this special sauce and this little country creating 10% of the planet's unicorns and so much value in venture capital and innovation? And I think the only way to understand it is that we've learned how to turn curses into blessings. We use these constraints that are imposed on us in order to get through them and beyond them. And that's really, I think, the basis of our secret sauce. So a curse is that we have no water. There are many parts of Israel, and unfortunately, increasing all over the world, that have the same problem. Except what did we do? We became the world's leader in water technology. We lead the world in drip irrigation. We invented it. We lead the world in desal. Today, the majority of our drinking water comes from the sea. We lead the world in water recycling. Today, over 90% of Israel's water is recycled. So when you eat those delicious cherry tomatoes, when you come to Israel for a visit, don't ask your host where the water came from that created them. It's safe and clean and tasty, but we recycle so much of our water. Now, these guys, by the way, they're alive. They're just tired, okay? Please, I know it looks like they could be much worse, but these are our kids. And the curse is that we have to be on the guard. We have to be ready to protect ourselves. And so our young people are put in the situation of life-threatening situations. That's a curse, right? Well, not really, because the reality is it makes our kids grow up in a different kind of way. They get exposure to cutting-edge technology units like 8200. They get a chance to lead. 10% of our forces are officers, and they really become people who work as a team and are mission-driven. Another curse is that Israel is so small, there's no market. This is one of our open-air markets. It looks pretty sparse, but the reality is that you got to be a little bit nuts to try to make a fortune in Israel. When I go to Brazil, I meet people who are entrepreneurs. They say, we're going to focus on the Brazilian market because it's so huge. You can do that in a country of 200 million people. You can't do it in a country of 9.5 million people. So the curse turns out to a blessing, because our entrepreneurs want to build global brands, global winners that attack all the markets around the world from day one. And whether it's companies like Checkpoint or Mobileye or SodaStream, or today Wix or Fiverr or Monday.com or all these others, they are not focused on the Israeli market, they're focused on the global market. Another curse is that we basically face people who would not like us to survive, okay? That would, essentially want us to disappear. It's an existential risk. Well, guess what? It focuses us on choosing life, on being life affirming. So as I said before, I just had another grandchild last night. I now, thank God, have 11. We have the world's, for an advanced country, the highest birth rate in the OECD. Our birth rate today is about 3.1. We have a very family-oriented society. Our life expectancy is one of the top 10 in the world. And we basically learn to take risk because we're all going to die sometime. The question is, what are you going to do with your life, before we're all finished, and go out and do something great. And finally, we're a tiny country. Look at the size of Israel around its neighbors around the world. There's nothing there. And there are virtually no natural resources, although we recently found a little bit of gas in the Mediterranean. But guess what? That curse has become a blessing, because rather than focus on natural resources, we focus on human resources. We have the highest percentage of Nobel Prize winners per capita. We celebrate excellence, and we focus enormous effort on our kids and on generating, essentially the leaders of the next generation of companies. So what we're doing at OurCrowd is we're democratizing investment. Okay, we've been pioneering this all over the world. People are talking about it. The way we do it is with this wonderful platform, okay, which is a digital platform that gives you the ability to both explore and discover new companies, to get reports, to actually help the companies with introductions, to actually help your friends and family find jobs with our companies, all done digitally, all online from your desktop or your mobile phone. And we're getting better and better at performance. You can see that our performance has been quite good on the realized return, and every vintage is getting stronger and stronger. So I'm going to show you an example of one of our funds. It's called OurCrowd 50, which is a portfolio index fund, which gives you access to 50 different companies for a $50,000 check. And the first series we did, I can show you the results, but basically it's an index approach, which has every sector and every stage, and you divide that $50,000 minimum, which is a low accessible minimum, into $1,000 bites. And here are the results of the first series. Okay, it turns out net IRR of 22%. Okay, the net multiple 1.73 of the 50 companies, 33 write-ups versus only 8 markdowns, and 9 are still held at cost. And what's really exciting is that between the realized exits and the exits in progress, we've already got 12 of these 50 companies. Take a look at the exits. So here are exits from companies like, again, we mentioned Uber, Beyond Meat, Lemonade, all in this fund, and companies like Kenna and Wave, et cetera, as well as a bunch of SPACs. And lately, our companies have been taking advantage of this window in the US public market to merge with SPACs. Here, 4 of these 5, they're in process, have been announced: Innoviz, Arbe, Alpha Tau, Memic, and 1 IPO, which is still in process in the Tel Aviv Stock Exchange. And when you look at the portfolio, what's left, you have companies such as Halo, which is a $1 billion unicorn, Honeybook, $1 billion unicorn, companies like BioCatch doing essentially behavioral authentication, BrainQ, which is using extensive artificial intelligence to treat stroke victims, in Sight Tech, which is using focused ultrasound to essentially allow people to deal with Parkinson's, et cetera. And by the way, I showed you the results of the Series 1. Here's the results of Series 2 in that same fund. It already, even though it's brand new, it's basically 17% IRR, which is quite respectable. We urge you to visit our website, OurCrowd.com. You can find these deals, and I'm going to give you just a little taste of a few of them, and then we're going to take your questions. Memic is a company, again, announced a SPAC. What looks like something out of science fiction is actually a robotic surgery device, which is used today for hysterectomies, can go actually up through the vaginal canal so that you don't need to do any incision in the stomach, either laparoscopically or more invasive. And this company is now SPACing at $1 billion. We invested much earlier. BioCatch, I mentioned, does authentication by actually tracking how you use your phone, how you type, how you touch, and it's quite a good way to protect data and to avoid financial fraud. Ripple is the world's, in our opinion, leading pea milk protein company. They're using peas, the mighty pea, which was the secret to the Beyond Meat success where we invested. And this company is doing very well, selling still in the States, but I hope someday in the future, selling in countries like Brazil. Locust View is building IoT, or Internet of Things infrastructure, to help electrical and energy infrastructure, as well as communication. Anything underground, they're doing it. Companies growing very, very fast. Halo is making chips to accelerate artificial intelligence, now $1 billion valuation company. Texi is giving you on your phone the ability to actually get technical support through AI. This company, it's remarkable, during the pandemic, technicians were able to fix your internet or your phone without having to come into your house because they could transmit you instructions, okay, through your phone. BrainQ, I mentioned, gives you this incredible way to help treat stroke victims, and the new test results are just stunning. Honeybook is a platform for small business owners, and what we call gigsters, where they both can manage their business, their communication with their customers, as well as bill them for services. And Alpha Tau is a remarkable company using a radioactive dart to destroy cancer, also doing a SPAC at this moment. Nexa 3D is a 3D printer, which prints faster than anything we've seen, and we're co-invested with Saudi Aramco Ventures. HIL is using high-powered lasers to excite protons so you can get proton therapy for anti-cancer work. Sight Diagnostics is using essentially AI and optics to get real-time blood analysis, what's called CBC, or complete blood count, actually within 10 minutes at a point of care. Consumer Physics, a great company for many of you in Brazil, can give you agricultural data in the field, whether it's corn or soybeans or wheat or berries. They will use miniature spectrometer and then connect it to the cloud. And finally, Super Pedestrian, which is a new advanced robotic scooter, but it actually has intelligence. It's a joint effort between an Israeli entrepreneur and the MIT robotics lab, and this is becoming very, very popular. I think we're going to call it with that, Rodrigo, and we'll look forward to your questions.
Thanks for fine words. It's always amazing to be able to share with the Brazilian audience, some more color and background from what we're doing in Israel, and the challenges of all these technology creations. So talking about instability, which I think that you guys from Israel are quite used to, but not all the investors are. So a question to Alec first, how do you see, how does political instability and inflation can affect these disruptive companies that we invest on their trajectory to, to growth?
Thank you for the question, Rodrigo. It's an excellent one. And I would go to that contrast between fixed income type of investing and equity investing. In equity investing, you're investing in a company. A company is a growing business. It tends to be longer term oriented type of investing. And if the business grows, irrespective of what's happening with inflation and pricing, value and wealth are going to be created. In contrast, fixed income investing is much more subject to the vagaries of inflation. Inflation can eats away at a fixed income. In the US now, we have negative real interest rates. So buying a bond is really giving away a little bit of purchasing power every year. I assume it's somewhat similar in Brazil, given my sense of where rates are. So investing in businesses that are expanding customers, expanding their market presence is a bit of a very effective hedge against inflation and the vagaries of governmental policies.
Great. So we have another question here now to John. John, we know that Israel became one of the superpower ecosystems, and we can somehow humbly compare with Silicon Valley when you talk about microchips and semiconductors, right? So there's a lot of things, a lot of let's say equipment to be able to leverage any kind of project that you start from scratch. We're seeing not only Intel buying Mobileye, but then also Habana, and instead of changing their R&D centers to another geographies, just investing more and more, as we have also this new investment being done in close to Haifa with close to $200 million, right, just to enhance more those projects. So can you tell a little bit more about how are we investing in these companies, and can you maybe pick up one about semiconductors and give more color about those companies?
Sure. Thank you, Rodrigo. Look, I think that semiconductors are really important. There's a worldwide shortage. Everybody's waiting for delivery. It's become a political, football between the US and China. Israel's sort of caught in between. But where Israel has an unassailable position, a very strong position, is on the design. We do actually have what are called fabs or fabrication. Intel's built perhaps the most modern and one of the biggest fabs in the world in Israel, in Kiryat Gat. But what makes Israel a superpower in semiconductors is our capability to design. So we're always looking at interesting companies. I mentioned Halo before. That's a company that we did a seed investment at a very low value. Today, it's worth over $1 billion. And the company makes a chip to accelerate AI routines, artificial intelligence routines on the edge, because so much data is required to process properly artificial intelligence. You don't want to have to transmit all that data from far away on the edge in terms of edge computing. So the problem is most processors can't handle it. So Halo has made a special purpose processor to do that. Another company we just invested in is called Visic, and they're making a new gallium nitride transistor, would you believe? Gallium nitride is a new material which creates really efficient power transistors, which are critical in things like inverters, or in particular for electric vehicle batteries. So EV, which we all know is one of the biggest things in the world, they need gallium nitride. Turns out in Israel, we think they have the leading company in the world for gallium nitride called Visic, and we just invested in it. We have a company called Celium, who are making essentially ability to put in a chip 5G coverage inside your home. How many of us get on that cell phone of ours and we sit there going, hello, hello, because I'm downstairs, there are thick walls. This problem, by the way, of coverage indoors is getting worse, because as we go up in frequency and in bandwidth, such as 5G, it's going to be a much more serious problem. It's already a big problem. And what Celium is doing is making a chip which the cable companies or the telecom companies or the cellular companies can build into small little devices and actually give you 5G coverage in the home. And those are just the beginning. We have a bunch of really interesting semiconductor deals, and we're looking for new ones all the time.
Great. There's another question that I can link and just do one in a row with you, John, is what are the top 3 sectors that OurCrowd is looking at the moment? It's a
That's hard.
one.
It's like choosing between your children or grandchildren, which one do you love? We love them all, but I'll go ahead and look, take a look at me. I'm a guy who likes to eat. Okay, we all like to eat, but I really like to eat. And I am convinced that Alec likes to eat too, but he looks different. Yeah, the reality is that the opportunities in food tech, in food technology, are huge now. And it's not just companies like Beyond Meat in protein for replacing beef protein, or companies like Ripple replacing it in milk protein. But we have companies that are reducing sugar intake, such as Dumatoke or Blue Tree. We have companies that are doing vertical farming to get completely unbelievable tasting leafy vegetables like Plenty. We have a company called Sufresca, who is coating vegetables and fruits in a way that will extend their shelf life 2 or 3 times from what they do now, without having to change the setup of the packing facilities.
It's tasteless, odorless, and organic.
Yeah. So, I'm a big believer in food tech. I'm a huge believer in cybersecurity. I think that cybersecurity is this unbelievable trend that simply won't go away, because every advance we make, the hackers are staying, we go up one, they come up one. We go up another one, they go up. And today, Israel is really the world leader in cybersecurity. And 41% of all dollars invested worldwide in cybersecurity are invested in Israel. We have a tremendous portfolio. We just invested in a great fund called Galilot, which was ranked by Preqin as the #1 seed fund for its first fund. And again, I want to remind the listeners that we give you the ability to choose companies and build your own portfolio, or to choose fund managers like OC50 or Galilot and others, so that we do both. And finally, I would say the third sector is digital health and medical technology. We don't need a pandemic to remind us that the world is changing rapidly in this area. As a result of the pandemic, there are estimates that as much as 70% of doctors' visits and hospital visits will now move to telemedicine. Think about what that requires in terms of both new hardware, new software. We're investing in companies like Diagnostic Robotics, who are giving you an AI-driven triage when you go to the hospital. Companies like Sweech, which are helping you manage your chronic disease. Companies like MediWare, which are preventing your doctor from making a mistake with your prescription, or your pharmacy from doing that. Companies like Alpha Tau that are, a little dart, which will blow your cancer away. Or companies like HIL, which will generate proton beams. So we are very big believers in that area. And these are just 3, right? I mean, it goes on to mobility, and it goes on to the cloud and e-commerce and sports tech and prop tech and infrastructure and energy, okay? Because the whole world is changing. And if you're not going to invest in innovation, then frankly, what are you going to invest
Well,
in?
I mean, the point is that software eats every industry. Digital technology eats every industry. So there's even the most staid, boring types of businesses are more and more of the value chain is digitally driven. Rodrigo,
Yeah.
you have other questions, and we're running short on time. I want to get to as many as we can.
Yeah, we do have a last one, and I'd just like to aggregate that some groups that we just said, the sectors, they will divide in subgroups. So one which makes me very curious is how, wellness will be disrupted, and, how these sensors are going to help us to, feel happier and more relaxed when we need them, so on. So last question, Alec, investing in VC is like getting inside the boat and going across the Atlantic. When you're inside the boat, you don't come out. So how can we somehow share some words with people that, so for someone that never invested before in venture capital, how do you take the first step? It's a question
Sure.
that.
No, it's a great question. It relates to two things I spoke of at the outset. One is the concept of asset allocation. Okay, there are many categories you can invest in. Many people's investment starts with real estate, with their home. It's also a place where they live. But classic investing in equities and bonds, fixed income, that is, natural resources. But it makes sense to allocate some portion that you don't need to see for a long time, that can sit in that boat in the Atlantic as it crosses, that is long-term oriented. In fact, retirement accounts are actually the most logical place to allocate long-term oriented investments, because you shouldn't be touching that money. And in many countries, you can't touch that money except with a great penalty for a very long time. Now, in terms of dipping the toe in the water, to continue the ocean metaphor, we've talked about being locked up in the boat for a while you cross the ocean. The diversification is critical. I talked about allocation. I want to talk about diversification. And there are two ways to diversify. Either investing in a fund like an OC50, as John described, where you take 2 cents of every dollar, and it's going to be allocated to to one of many segments and companies at different stages, from very early stage to pre-public. So you get that diversification instantly. Or if you're so inclined, to build your own portfolio company by company. And we strongly encourage people who go that route to invest in at least 10 companies and to plan accordingly. So whether you're investing $50,000 or $5 million, to think in terms of allocating portions of that to many different companies, but you are diversified, because this is a risky business. Some companies, you're going to hear me say it, some companies will be zeros. They will disappear. Okay. The reality, though, is some companies will be 5, 10x, and hopefully more. And the beauty of diversification is that you can only lose 1 times your money, or you can make a lot more than 2 times your money. And so the 2, 3, 5, 10xers can far away outbalance those few companies where you take a loss. And so diversification is critical.
Very, very well said, Alec. Just one quick note. I see that Natalia sent us a final question from Paolo, who's asking about what is the next, sort of frontier of technology which we'll be investing in. And I want to mention one thing, which is called impact investing. We're living in a very, I think, important time for the planet, for our civilization, where you can see it on the news, you can see it in front of your face, you feel it every time you go outside. We are in great danger in this planet. And technology has a lot of solutions. And whether it's to solve water pollution, or to solve energy, or to solve health, companies that we're investing in can make a difference. Just this week, there was a report of one of our companies that helped separate conjoined Siamese twins in an incredible operation.
Conjoined at the head.
At the head. They were connected at the head. And how do you separate them? Turns out you use virtual reality, which allows the doctors to practice and practice without starting the surgery until they're ready. And it worked. We have companies like Blue Green Water Technology that are cleaning up lakes and rivers all over the world from this horrible pandemic of toxic algal bloom, which is killing our water. We're just now getting ready to be looking at another round of our company called H2Pro, okay, which is a hydrogen energy company. We all know how important hydrogen is. And so I believe strongly in the double bottom line, where you can both invest to make a return and invest to actually do something good and help save the planet. So that's the next frontier, Paulo.
Thank you so much for those words, John, Alec. We could stay here for a whole day talking about innovation, about our crowd and how we love doing this job. In respect of the time with the audience, we're going to wrap it up here. See you all next time. It was a pleasure spending the last hour with you all, and I hope you enjoyed and have a great day.
Thank you very much.
See you all.
See you soon.
Bye.